Hi, and welcome to Dollars and Making Sense, a weekly show about finance, money, and investing. I'm your host, Ray Treverson from OTG Capital. We broadcast locally on Radio Northern Beaches and around Australia on the Community Radio Network. We also go out on Spotify, iHeartRadio, YouTube, and a whole bunch of other things that please check our website if you're not sure. Now, this week we've got a newbie. Kerry Said is from Wealth Creation Advisors, and she is a financial advisor. So, Kerry, welcome to the show.
Thanks, Ray. Lovely to be here.
Now, I'm really pleased to have you on the show because not just because it's your first time. We always like to have fresh faces and new people coming onto the show, because it's not that we get boring or anything, but if you keep seeing the same old faces. But Kerry, you and I met last year. We were chatting about a whole range of different things, but I guess one of the things that became really interesting is that you do a fair bit of focus on portfolio management and portfolio construction. And so, ladies and gentlemen, one of the things that I've asked Kerry to come on the show today is to talk specifically about portfolio construction. I have to put my hand up here and say, I'm hopeless at it. Okay, so I've read the notes and I'm learning. Well, it's stuff that I already knew, but maybe I don't have the discipline. So maybe we can talk about that a bit today. So, Kerry, before we get stuck into the meat and potatoes of the show, maybe give the audience a little bit of a view of who you are, where you've been, and what you're doing at this point in time.
So, Ray, I'm a financial advisor. I started my career in financial planning in 1994, focusing on quality advice and working with financial planners in compliance and running their businesses. So working with so many financial advisors over the last 30 years has given me a pretty good insight into what good financial planning can do for a client. And I now provide financial planning advice to a range of different clients. I have a master's degree in financial planning and an SMSF specialist advisor qualification.
Okay.
Yeah.
Well, that's excellent background. I guess one of those interesting aspects of your background is that in support of financial planners, and we call them paraplanners for people that may or may not be aware of that terminology, but paraplanners learn so much as you go, and it's not surprising that they eventually go and do their qualifications. And so I think you've done that rising through the ranks kind of career path, haven't you?
I've never actually been a paraplanner as such.
Okay.
I've been a practice manager, which oversees the paraplanning and the advice and does the strategies for the advisors. So, yeah, but yes.
Okay, so I guess from that perspective, because you have that specialisation in SMSFs, self-managed super funds would be, I guess, something you'd put your hand up and say, I'm really good at that. Would that be a fair thing to say?
I'm really good at self-managed super funds. Yes, it's a complex area, and a lot of people tend to get into a lot of trouble if they don't do it correctly. There are a lot of rules and there are a lot of little things to know. So, yeah, self-managed super funds are very interesting and very worthwhile when you get them right. So yeah, I love self-managed super.
I mean, over the years, I've had many people come on the show from the SMSF Association, from various trade magazines. I've also had lawyers, property specialists, and one of the things I've also had Consumer Affairs and the like, Services Australia, coming on talking about this, because while it's a wonderful area, it's also very rife for corruption and people not doing the right things. And if you listen to any of my previous blogs, I put my hand up and said a number of years back, I was guilty of the same because I didn't understand it properly, and I do these days. So let's move on. Yep. Today we're talking about portfolio construction. So why is this important to you?
Portfolio construction is it's the main it's the most important foundation for a solid wealth creation strategy. Having a well diversified portfolio helps in many ways. It mitigates losses that we can see in the share market, in the Australian dollar and property markets, but it also assists. A well-constructed portfolio assists clients to be able to take advantage of opportunities when they rise in the market as well.
I guess one of the things that when I look at portfolio construction and portfolio management, it often reminds me of this truism, if you fail to plan, you plan to fail. I guess that's really part of it. You're laying down the foundation with your client when you first embark on a journey with them. I guess the first thing to ask them if they had a plan to begin with. I reckon it'd be a good question, don't you think?
Well, look, most people understand what planning is about. They work very well in their business. They're good at their job. They understand what the business plan is in their role as a business owner or an employee. So it's very interesting to find out that most people don't have a personal plan to succeed. So that's where it comes into play that any industry, doctors, lawyers, executives, business owners, educators, despite moving through the business ranks and earning good income, they often overlook their personal planning.
I have to agree with you. I mean, I have some of my clients that are SMSF trustees, but also people that have come along and I used to do business with many, many years ago. Excellent business operators. But when it comes to personal finance and looking after their own thing, they sort of go, oh, I just, I want someone else to do that for me. And I'm often curious about that as well, what personally motivates or doesn't motivate people to want to make their money work harder for them. But I guess one of the interesting things that I enjoyed reading, you sent me through some really good articles that we're going to, I guess, base today's discussions about. And they're based on articles from Forbes and Morningstar, two excellent resources that, again, ladies and gentlemen, we don't plug anybody in particular. Probably the biggest mob I plug, Kerry, would be Money Smart. Okay, so
the government website.
It's an excellent resource. But this particular resource that we're looking at today is, I guess, drawing from both Forbes and Morningstar. There's a level of consistency, but are some variations in theme that you see when you're talking to clients?
Look, yes, the articles are fairly consistent. The Morningstar one is I guess aimed at more experienced investors, and the Forbes one is more general in nature. Consistently, I think that, and going back to what we were talking about before, many people really are focusing on their job, on what their job is, and not really focusing on their own personal wealth creation or wealth creation strategies. So the Forbes article really focuses in on what I believe is the most important part of portfolio construction, is working with the client to understand where they currently are and where they want to be and when. And the timing is really important, because often people get to a point in their life and they think, I'm so successful, I've done all these really great things in my job, and I've got all this stuff. But when is the day that I can stop or slow down or not have to go to work every day? So, it becomes important when people kind of realize that, that their direction is maybe a little bit lost. They don't have an actual plan to stop working, I guess, or to choose when they can slow down.
You make such a great point there, Kerry, because one of the things that I'm on the cusp, I guess, in this interesting hint of time between now and when I actually do retire. But when you talk to SMSF trustees and when you understand the kind of work that's still required to run them, you end up having a job after you've retired, because you need to run your own finances and keep the money coming in. If we obtain enough, I guess, stuff. I know my own mother, before she passed away a few years back, I saw the kind of lifestyle she was living on the age pension. And I say to anybody that's listening, that's not really what you want to aim for. You want to be doing a bit better than that, don't you?
It would be tough, I think, on the age pension for sure.
Yeah.
Absolutely, for sure. So property, I guess, we can talk about SMSFs, property inside of SMSFs. It's very, very popular. Most people that have SMSFs, they have one or two properties inside the SMSFs. They get to a point where they're looking at retiring, or they know their end date and how many more years they want to work for.
Mm-hmm.
And we look at the property and we look how the portfolio has been constructed. And sometimes the property is taking up a large portion of the assets inside the self-managed super fund. And then we have the question of how we're going to fund the retirement income with the rental property income or something like that. So portfolio construction is really essential as we get closer and closer to the retirement planning.
To the pull the pin date, I guess. So
yeah.
from a perspective of portfolio construction, that's the first thing I guess you'd be talking to people. I guess you structure a conversation rather differently to a 30-something compared to a 50 or a 60-something. Would that be fair in saying that?
Absolutely. Most 30-year-olds are not looking to retire in the near future. Everybody loves the idea that we can choose when we want to go to work 1 day or 2 days or stop working completely. We all love that idea. But for the 30-year-olds that I've been seeing recently, you know, the most important thing on top of their mind is home, buying a second home, family, sometimes even paying off student debt. So there's a completely different conversation and a different way to structure that portfolio based on the time that they've got to make the portfolio work for them, and based on what they need for now and I guess and in the future.
Yeah, excellent points. Well, we're just about half time. You're here on Dollars and Making Sense, a weekly show about finance, money and investing. I'm your host, Ray Treverson. Really pleased to have at the microphone for the first time, Kerry Said, and she's from Wealth Creation. We're going to take a short break and we'll be back with you in just a moment. Hi, and thank you for listening to Dollars and Making Sense, a weekly radio program about finance, money and investing on Radio Northern Beaches and nationally on the Community Radio Network around Australia. The views, comments and opinions aired during our program should not be construed or viewed as financial advice. Any commentary is general advice only and does not take into account your objectives, financial situation or needs. You should consider whether the advice is suitable for you and your personal circumstances. If in doubt, you should contact an authorised licensed financial planner. We welcome questions and feedback, and you can get in touch with us via our blog, social media channels or email. Please search for Dollars and Making Sense in your favourite podcast platform or check out our blog at otgcapital.com.au/blog. Hi, and welcome back to Dollars and Making Sense, a weekly show about finance, money and investing. I'm your host, Ray Treverson. At the microphone this week, we have Kerry Said from Wealth Creation Advisors. And Kerry, today we are talking about portfolio management. And one of the really interesting resource articles that you sent through to me are 6 steps to constructing a good portfolio. So I thought it'd be really good for the listeners and viewers if we kick off and have a look at those steps. So what's step number 1?
Defining the goals and the time horizon. So understanding what you want to achieve and by when.
I guess we were kicking off about that just before we went to the break when we were talking about, you know, what's an appropriate discussion at an appropriate age. Okay, that's a good point. So age appropriate and, you know, what are you trying to achieve? I think it's always a great start. It reminds me of Steve Covey, you know, start with the end in mind. It's a good little tip. Okay, so what's step 2?
Understanding your tolerance to risk. Some people are really comfortable with cash, and then they must understand that cash doesn't necessarily produce the highest returns. So really get a good understanding of how a person feels about risk, and also if there's a partner in the group, so husband and wife or another family member, making sure everybody's comfortable with the approach that we take to construct the portfolio.
Okay, that's a good point. I guess in your time over the years, how much impact has blended families had on these kind of discussions as you move forward?
A lot. It's really, really important to make sure that everybody is on board and everybody has an understanding of and comfort with what we're doing. So there's usually one person in a relationship that's more interested in the finances than the other person. But just, I guess, putting myself there to say, well, if you have any extra questions for the partner that doesn't quite, or is not quite as interested, it always helps so that there's no arguments, household arguments, and that everyone can sleep well at night. So that's the
I guess, Kerry, we're both family people. I guess as an advisor, how often do you find yourself being the arbiter or the meat and the sandwich for these kind of discussions?
Every time.
Oh, that's funny. So every time you end up being the arbiter, I guess that'd be that wanting look of.
I'd like to say educator.
Okay, fair enough.
Yeah.
Okay, so I guess keeping everybody informed, and again, one of the interesting facets with people in the more advanced stages of life, estate planning becomes a big part of that as well. And we've had many people on the shows over the past years that talk a lot about that, but construction of the portfolio and its amenability to an estate plan and all the documentation that goes with it, I think becomes a real linchpin, doesn't it?
Absolutely. We, over the last 30 years, we've had many clients pass away, unfortunately. And then we have the next generation, which is the adult children, their adult children's spouses, the widowed partner that now need to be educated and assisted with either dissolving the SMSF or helping with releasing the assets and distributing them according to whatever estate planning documents are in place. So, it becomes very interesting, I guess, for me to understand how the family dynamic works, but also it's really important that everybody understands what's going on and why.
And one of the things I think key to note, I mean, I've had Andrew Inwood from Core Data, I've had Services Australia, I've had so many experts coming on the show talking about this $5 trillion wealth transfer that's going to be occurring in the next 5 to 10 years as the baby boomers retire and or die. And again, like taxes, we're all going to meet that mortal coil one day when we're departing. And so this discussion is going to happen to everyone regardless. And so I guess being on the front foot and planning for it as best we can, Kerry, is quite important. Okay, so what's the next step?
Well, after we've kind of analysed what you want to achieve, whether it's go on a holiday, whether it's to pay off the mortgage, whether it's to leave an inheritance for your children or help them purchase a house. And the next step was the tolerance to risk. The next step is choosing the investments. So there are a whole range of different investments that are available. Some people love property, some people love cash, some people just don't understand the share markets and need maybe sometimes a little bit of explanation on the type of investments that are available and how they could possibly assist in helping grow the wealth and helping to meet the goals within the certain timeframes. So investment selection is step 4.
I'm curious, as an advisor of long standing, one of the things that I guess kind of frustrates me, I'm a bonds kind of guy because that's the product that I flog. Okay, so I make myself very clear and transparent in that regard. But there are 5 asset classes out there, and yet, other than the family home, most people end up talking about cash and shares and very little else. Do you find that a challenge in when you're talking to people about portfolio construction, that there's a little bit more than outside of the family home and cash and shares?
Yes.
It's a simple answer to a complex question, right?
It's an education process, and people don't know what they don't know. And I'll go back to my point. It's really important for people to be able to sleep at night, to invest in something they understand. And that's why people understand property, or direct property, I should say, because they can see the house. They understand that, the rent comes in, they get paid, and the management fees and the interest on the loan goes out. So there's expenses. Other type of investments require a little bit more education, but certainly bonds, managed funds, SMAs, managed accounts, private equity. Some people like crypto. All these different types of investments that all have I guess a place in a portfolio.
Yeah, I've got to say, I'm, as I've got a social media manager now, she keeps telling me, coming back and saying, we need to talk more about crypto because it attracts eyeballs. And I just keep saying, look, I'm just not a fan until we got a little bit more government backing and a lot more regulation. I'm always stunned at how little regulation is in that space and money gets nicked out of there all the time. Neither here nor there. Everyone likes it, everyone's going to have a different view about it. Okay, so I guess in selecting sorry, Kerry, you were going to say something.
I was going to say in all my years, I have had one client that has made some money from crypto.
And how many have lost roughly?
I can't tell you. A lot.
A lot more than they've won.
Yes.
Yeah, It's funny. It's my experience as well. But I think the people that lose don't cry about it and don't yell from the ramparts, do they?
No, they forget their passwords and pretend it didn't happen.
Oh dear. Yes, very much so. I just moved my camera there. Okay, so we've now gone out. Now, interestingly, when you're doing asset allocation, is that something like a fairly set formula that people look at, or is that something that they sort of twiddle the knobs a little bit on?
I use software to do my asset allocation, and depending on the client, the time frame, and all of those other things that we've just talked about, I do what's called financial modelling on the different types of assets, the different types of asset classes.
Right.
I do have clients that just like property, and it makes it difficult to diversify using just property. However, we have options. You can invest in Australian property, you can invest in international property, you can invest in retail or commercial or, different types of residential property. So when constructing the portfolio, the modelling is quite a complex process and something that I really personally enjoy.
I'll bet. Well, it's one of the things, I guess. So, okay, so we've now gone through, we've done the asset class allocation, we've done the investment mix. What's the next phase from there?
To just the last phase, I guess, is just to regularly review and monitor and adjust the portfolio if required. So sometimes life changes, we get married, we get divorced, we have children, or retirement hits, and there are changes to the portfolio along the way. How much income producing assets the portfolio holds, which will increase during retirement because you'll be drawing an income from the portfolio. Regularly reviewing and adjusting the portfolio is great. It's like buying a car. You wouldn't buy a car and not service it. The portfolio needs to be serviced to make sure that you're constantly in tune and up to date with meeting your needs and goals.
I guess I'm curious, as an advisor, is that something you would do with clients, say, every 12 months? Or I guess with the volatility that's certainly abound these days, is that something you might want to do a little more regularly?
So for me personally, I do annual reviews, but also I'm on the phone whenever required. So some clients need more contact and more realignment than others. Generally speaking, unless there's a major event, we just fine tune. There's no major changes. We set up a long-term portfolio and we just fine tune it along the way.
Excellent.
Look, as required.
As required, I guess. Absolutely. Yeah. And again, if they've got something that, it's a red flag or they need urgent attention, that's why you're there. And that's, part of your job in looking after them. I guess in rounding out, one of the things we'll do, we'll put the reference links of these resources that you've sent. We'll put them in the blog article on the website. So happy to do that. And I guess other places, we've talked about Money Smart's always a great place to start. And again, Kerry, I guess from that perspective, the old internet search engine is always a great place for people to go out and look for, I guess that beginning element. But I guess if you can leave one gem when it comes to portfolio management and construction, what's the one thing you'd like to leave with listeners and viewers before they tune out today?
Be comfortable. Make sure that you understand where you're investing, and where you want to be, what your goals are. Have a really good understanding of your personal plan.
It's a really interesting thing. Very similarly to, I've talked to people about estate planning. This fellow said to me, get a piece of paper and a pen and write, and just put them down in writing. That's a great place to start. Same thing with what you've just said. If people came to you with that written out and say, hey, Kerry, here's what we've been thinking, that's a great start, isn't it?
Yeah. So the first couple of meetings that I have with my clients is that hard conversation as to, okay, you're earning this much income. This is where you think it's going. Let's actually do a budget and see. Let's check it out. And most people are, they're not always correct. So nutting out the details and getting to the truth.
That's very politely putting it. Okay, so look, thanks for listening to Dollars and Making Sense, a weekly program about finance, money and investing. Kerry, it's been a real pleasure to have you here on the show. We broadcast locally on Radio Northern Beaches and around the country through the Community Radio Network. If you've got questions or feedback, please pick us up on our socials. Kerry, you're welcome to put this on your webpage as well. Please search Dollars and Making Sense in your favourite search engines, and we're on all of these things these days. My social media manager will look after it. Kerry Said, thank you so kindly for being on the show.
You're right. Thank you.